You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. Good to be with you, and good to be with our audience out there in, I can never remember.
Cyberland.
Etherland.
Cyberland.
Okay, Cyberland is good. Yeah.
Our first order of business is a question from Justin in Berkeley, California. Bob often cites the margin clerks and the vigilantes as regulators of irresponsible monetary policy. Now that Moody's has downgraded U.S. debt, about time, I suspect, he says, and the last bond auction was ill-attended, would Bob say the bond vigilantes have now come out of the woodworks?
Oh, yeah. Market forces there. The hit to the bond market has been severe. And there's, you got market forces, just the ones out there driving the change. Then you have policymakers doing things, which is also another risk. And the street sees the risk and marks yields up. And but it fits in with our pattern that one of the features of a great financial bubble, which we have been in, is that you take interest rates and adjust them for the rate of inflation, so they're called real rates. They go down a little with the boom, and then they go up. And they've gone from minus 0.40% and now up to getting close to 2%. So you can say it's a 2.5 percentage point increase in real 10-year yields for treasuries. And this is becoming somewhat painful, but on the typical post-bubble recession, contraction, depression, whatever you want to call it, the typical increase has been in the order of 10 percentage points. It's Mother Nature's hell on earth, and it doesn't happen all at once, but the main thing is that we are now on a trend of rising long-term rates, and it could go very high, and, actually dislocatingly high at some time, yeah.
Now, Justin goes on to ask, the Fed, which is forced to follow private rates regardless of what they want to do, are they unable to lower rates? Will they have to try and start quantitative easing all over again to create a market for bonds? Yeah,
that leads us into another aspect of interest rate market. Short rates, such as T-bills, go up in a boom, and the Federal Reserve follows, trying to look like they're in charge. And then when the boom is over, short rates decline, such as Treasury bills, and the Fed follows with its Fed funds, again trying to look in charge. But you want to point out that also, recently there's a couple of headlines where the pundits in New York are saying that the decline in Fed funds rates will be good for the market. All you do is take charts back for 300 years, which are available. You can get interest rates way back then. And the problem is that long rates go up with the boom, and that is an indicator of the boom, and short rates go down with the bust, and that is an indicator of the bust, and they can go down to 0, while the S&P is heading down substantially. We've got charts on it for each of the great financial booms, and it's in line. Real rates are going up, and that is a confirming item that we're transitioning into a terrible recession.
Moody's downgraded the U.S. debt's AAA credit rating. First time in history that's happened. What does that do for everybody, considering the U.S. is the biggest single market?
Well, I can't speak for everybody, but speaking for myself, it makes me nervous. No, the U.S. administration of their finances has been reckless, and Moody's rating agencies are noticing it, and I think they are doing what they should be doing, is pointing out that U.S. debt is not as assured as it was.
We'll take a look at some of the headlines that caught Bob's eye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Headline number one that you sent me: China struggles to lift home prices as April shows no growth.
Yeah, I double-checked that one, Jim. They're trying to lift home prices. Yeah, so home prices have been weak, and of course communist governments are infinitely crazier than just liberal governments, and they're out there thinking they can lift home prices. Well, really, that's ridiculous. So, no, it's another example of weakening conditions in China and the insanity of trying to prevent it.
And, of course, China has all those artificial cities they built in a frenzy where they didn't finish the buildings. They left windows out. They didn't paint them. And so they were weathered. And now they have to go and collapse those buildings and start all over again because the buildings are ruined. The water got into the rebar and the buildings aren't safe. They
may not even have the money to tear them down. We'll watch and see what happens. So,
well, you can turn them into vertical farms, maybe.
Good one, Jim.
Or climbing structures and charge people money to climb. And of course, at your own risk, just like when you climb a mountain.
Yeah.
Now, another headline that caught your eye was futures slide after Monday's historic retail-driven rebound.
Yeah, retail-driven rebound. What does that tell you? That the public is in, and if they're in and the market's rising or spiking up, that's a deadly sign. You know, sorry to knock the public, but that's what you get at a major peak. Is the public coming into the market, retail buyers, whatever you want to call, and they then are part of the topping process.
I also saw a headline that said U.S. consumer confidence is at a multi-decade low.
Yeah, I guess whichever outfit is doing the analysis, and yeah, I can see that the consumer is getting cautious.
And okay, now we have another headline here, and this one is U.S. existing home sales weakest April since Great Financial Crisis.
Oh yeah, that goes back to, I wonder which one they're talking about.
Yes, maybe I know.
Maybe 2000. Yeah, probably 2007, 2008. Yeah.
Vancouver, not any better. Vancouver, Toronto, all the real estate agents, friend of the show, Alan Mark Angel, saying he's never seen real estate sales this slow since he's been keeping track. And believe me, Alan's been around a long, long, long time.
Ooh, Jim, that's an interesting number.
Yes.
From a good source. Yeah.
From a very, very good source.
Yeah. Yeah.
So that's an indication people aren't having confidence in the economy, or they think things are going to get worse and prices are going to come down, and they're waiting for that. But people are used to high real estate prices, and they don't want to sell their house for less than at least what they paid for it.
Yeah, the whole crowd is in there, Jim. There'd be no. It's a paralytic market. The spike was in a few years ago, up. And now real estate is weakening, and that is also a feature of a post-bubble contraction.
Another headline, Russian economic growth plummets after Trump takes office.
Oh, yeah. That one had the magic word, plummets. And you're occasionally seeing a headline. It doesn't matter what economic series it is. Plummets, plunges, we're getting those, and they make a striking headline, whereas the economic series that are covering that may be done quarterly and always a couple of months behind the action. So I like the headlines like that.
Also, headline, EU and Britain go ahead with new Russia sanctions without waiting for Trump to impose any. Also, interestingly, Trump imposed tariffs on everybody on the planet except Russia and North Korea. So, and now it's been announced that he's going to put 50% tariffs on the European Union starting June 1st.
Yeah, there's two levels to these tariffs that he's doing. One I kind of like, which is he's going to try and get government off of income tax. And as prior to the early 1900s, all governments raised their funds through taxes on things, tariffs, and you can call them if you wish. And then that would be wonderful, where the government is going to try and shrink the size of government, and then get the funding over strictly from tariffs, and that eliminates income tax, and it also eliminates the Internal Revenue Service. And if that happens in the States, you can be assured it would happen in Canada, too. Canadians.
Well, in other words, just a big sales tax, like we have GST already.
Yeah. Sure. So anyways, but it's the right way to go. And then also Trump is, I think his eye on Canada about making it the 51st state. I think his net result is wants to have a secure border, north and south, open for trade without too many taxes and duties and stuff like that, and open for people going north and south, and just make it a really good border. And then that sets up Canada, U.S. and Canada as a North American wonder, an economic wonder. It would be. I like the idea, but more recently, well, here's another one I like. He took some sort of a shot at the people in Hollywood, and that's all right because Hollywood is communist. What can you say? So, but anyways, no. Then more recently, I think his tariffs and stuff are becoming reckless and unnecessary. I think he should settle down and get off them, and as I say, aim for having no income tax and all revenues accomplished through tariffs. That would be a good thing.
Now, in England, you have a mix of worst of both worlds because they have a 20% value-added tax plus income tax.
Oh, yeah, and then the current prime minister, he's a Euro freak, and he wants to undo all of the effort of Brexit, which was very popular, where England got out of the clutches of Europe, and this guy Starmer, the current prime minister of England, is actually almost traitorous in the way he is working with European bureaucrats to get England to surrender England's sovereignty to European bureaucrats in Brussels.
Yes, apparently, yes, the typical British double-decker bus doesn't meet European standards.
Oh, yeah.
And even the English traditional breakfast isn't up to European standards. So
oh, yeah.
I don't understand that one.
They even want to instruct the Queen on what to grow in the royal gardens, stuff like that. It's totally insane. But I think England's Prime Minister is about to fail, publicly seen to fail. He's just a flaming idiot. So.
And our last headline, Japan bond market on verge of collapse after worst auction since 1987.
Oh, yeah. That one goes back a long ways, doesn't it? A very nasty hit to their bond market. This is a result of unsettled markets, and it's also very unsettling itself. So it's a serious hit to Japan's financial markets.
And one of Japan's biggest problems, of course, is their low birth rate, where that's why they went to robots anyway, because just not enough workers to do things.
Not enough people. They need more people, yeah.
Well, Bob, have a great weekend.
Well, indeed. I'm glad we had a chance to get together, Jim, and there were some good questions out there.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on X @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.